Hello everyone. Welcome to another episode of Wealth Insights podcast, where we bring wealth conversations to life. And today we are joined by a visionary in the field of investments, Vishal Kapoor, CEO of Bandhan Asset Management Company. With decades of leadership across private banking, wealth, and asset management, Vishal has helped play a pivotal role in shaping India's landscape. In our conversation with Vishal today, we will look at the evolving mutual fund space, trends in investments, and how can we build a long-term portfolio. Vishal, it's great to have you here.
My pleasure, Vinay. Really a pleasure.
So Vishal, wanted to kickstart the conversation with the first question on the mutual fund industry. If we look at the mutual fund industry, we have seen a phenomenal growth over the last decade. What, in your view, has been the key structural factors that has driven this huge growth?
Wow, that's, I can't say I can encapture all the structural factors. I can attempt to list a few. And, going back to the principle of, to reach a tipping point, so many things have to happen in conjunction. I think something like that may have happened to our industry. So on the demand side, you've got a young population where awareness around moving out of real assets, which is traditionally how Indians used to, save and invest, to the benefit of financial assets.
Yes.
And awareness around that, realization about that, and then experiencing it firsthand and realizing that what the value and what the benefit could be, I would say is probably the first and the very important factor. Now, once that demand side experienced the benefit of mutual funds, that experience being positive and therefore self-reinforcing, that belief actually led to a lot more joining the momentum in a sense. On the supply side, I think on the manufacturing side, we've got a lot of competition leading to product innovation, but really a large role played by the regulator and the ecosystem. So regulators making sure that while we have the highway, we don't have too many accidents, we don't have issues that have traditionally in the past held us back. So things like potentially pushing products, mis-selling, aligning all the players in the ecosystem to that one goal of serving the investor. I think that has played a real large part. And in that, I think in that journey, we've seen regulatory changes which have helped streamline processes, have brought in transparency, innovation in digital technology, new products, simplification of products. All of that has also added. And then the role of the industry itself through AMFI.
Yeah.
To bring out an epic almost a campaign in mutual funds side here, mutual funds are right for you. That really getting the message down to every household and as much as possible. So I think these are some of the factors, both on the demand side as well as the supply side, which may have helped build the momentum that we're seeing today.
So Vishal, it's great you mentioned the point on AMFI, and congratulations on getting elevated to the Vice Chairman for AMFI.
Thank you.
Coming to the question on mutual fund industry, if we look at the mutual fund industry, we have reached a scale, right, at 75 lakh crores. I guess when 10 years back, people thought that in 2050 we would reach 100 lakh crores. This looks very close by. How do you see the growth in the next 5 to 10 years? And some people would ask, is it sustainable that you will see this same phenomenal growth which we have seen in the previous decade?
Right. No, certainly, I think, if you look back, it can seem dizzying.
Yeah.
That, we've had the type of growth that we've now achieved. And really, 20-25% CAGR over the last 5, 7, 10 years seems like a very rapid pace of growth. But actually, if I step back a bit, this could be the story of, just getting started in one sense. Because, stepping back, in so many years, while we've done very well, the proportion of household savings coming into capital markets, including mutual funds, is still single digits.
Yes.
As opposed to most other developed economies where it is significant double digits, right? AUM to GDP ratio, again, as an example, is still, quite modest for India, right? So most of the macro measures you would look at to see how the industry is done. Clearly, we are growing fast, but there's just so much more headroom, right? Even just look at the number of savers who we've converted into investors. The industry today stands at about 55 million odd unique investors that we have. In most other economies, most other developed markets, the proportion of the population which is investing through mutual funds is several factor above this. So a 10x increase in the number of investors is very, very achievable. So yes, while we look back, it can be quite satisfying to see the growth, but I think there are miles to go in front.
Yeah, so as you mentioned, we are just maybe scratching the surface right now. One other question which comes with mutual funds, and as you mentioned in the campaign, mutual funds sahi hai, it gets classified as a very commoditized product, mutual funds. And for some investors, it's quite boring. Do you still think that mutual funds is key to a client's long-term wealth creation?
Right. So firstly, on the commoditization of the product, sometimes we get accused that we bring too many schemes.
Yes.
So, there's a flip side to that as well. But I think the industry has probably found a good balance that, there is a lot of choice, but hopefully it's not so much choice that it leads to confusion. So like we mentioned that the regulator took a step a few years back where they said that we will tell you the categories and the strategies that you can offer. Yeah. And you can only offer one such strategy and not multiple. So there's not a proliferation of unnecessary schemes in a sense, right? But despite that, there are areas where you can actually innovate and combine things, etc. So the industry has found a good balance, I think, between core strategies, which are only one, and you have to make sure that that's your flagship, and satellite strategies where you can innovate, do things which might appeal to a different type of an investor. Now, while choice is good, I think coming back to the other point you made, investment shouldn't be so exciting in a sense,
yes.
Right? So it's good if the fund industry is a bit boring, because I think every seasoned investor, every investment guru, every study will tell you that actually boring is good.
Yeah.
And wealth generation takes a long time, and compounding alpha, using the market to your advantage are the things we should focus on, not just creating a lot of variety which is actually going to confuse. So I think we're in a good space. We've got reasonable choice, but we've also got the right focus on making sure that investors make money, because we are doing things sensibly and for the long term.
So you would agree that mutual funds should be the core portfolio of yours for creating wealth over
Absolutely.
long term?
I think as millions of investors have experienced and seen, and more are joining every day, it has proven now to be a vehicle which can help the smallest of investors as well as the largest of investors. Yeah. So we have investors who can start as small as 100 rupees, and of course the largest corporates who also choose to deploy funds into mutual funds, largest corporates with fancy treasuries,
yeah.
etc. So it's actually covering the whole gamut of investors, and that's because the product has proven its flexibility and range in basically catering to a whole host of investment themes and choices that you'd like to make. So I would agree that yes, you should look at mutual funds as a core part of your wealth creation journey. It is simple, transparent, effective, and it has proven now to be a very popular choice for many of these reasons, and certainly why wouldn't you?
Yeah. So Vishal, we try to keep some fun elements, right? The conversation should not be very serious all the time. So we have this element called decode the myths. So I'll ask 3 questions, short answers.
Okay.
So mutual funds, simple or sophisticated?
Simple first, sophisticated if you'd like it to be.
Okay. Volatility, is it an opportunity or risk?
Opportunity.
Great.
It goes with the market, so don't fear volatility.
Passive investing, a trend or is it a fad?
It's a trend, it's choice, like we discussed. Active is great, but passive can offer additional choice.
So Vishal, taking a cue from the previous section, I wanted to talk about passive investing. What's your views on that, and do you think it complements or can active funds coexist with passive investment funds?
I think as we've seen as a trend across the world, I think passive can complement active, and it doesn't have to be therefore an active versus passive debate. Yeah. Now, in a market like India, which is growing so rapidly, to ignore the potential of alpha creation through active fund manager, I think may be a bit too premature. So there is still a lot of research and supply and new ideas where I think active managers can really continue to deliver alpha. So certainly that part of the growth story is alive, kicking, doing very well, and therefore something one shouldn't ignore. But there are good reasons why, as has been seen globally, systematic investment, model-based investments, using quant to your advantage and reducing costs, adding some science to the art, can also be an additional way to invest, and that's where passives come in. Sometimes people think that passive is only tracking an index. Yes, maybe a large part of passives traditionally has been tracking the index, but actually passive strategies, including the ones that we offer, do have a lot more exciting strategies where you can deliver alpha through smart beta type products, etc. So there is a lot of variety there. Now, which one is right for you is something that you have to choose, yes. Right? And there are investors who think that reducing cost is my primary advantage, and that's where passive and combining passives becomes one way to offer it. And a lot of wealth managers are actually helping in that, for an advisory fee, they can help you do that. And there are enough investors who swear by actives because they've made money there over the last 20, 25 years, right? So I would say choice is good. Find your feet, find the one that you really want to do. But I would also caution that, because there is so much choice, let not analysis paralysis set in. Make that move and do what you have to, rather than analyze too much and then, get caught in not investing.
So Vishal, what's your view on the new asset class which has come for mutual funds, the SIFs? How do you see that asset class, given that long-short AIFs have had very tepid performance over the last few years?
Right. So the specialized investment fund, the new SIF, is a great addition to my mind, because it somehow, I think, sits between the retail mutual fund and the very high net worth product of an AIF. Right. And I guess somewhere it was felt that the gap may be, or the continuum may be missing some points in between. So while there is great beauty in a mutual fund product, it may not be allowed the sophistication, especially using longs and shorts, that an AIF is allowed. Now, if you want to access more sophisticated strategies, you have to be necessarily a high net worth investor with a 1 crore minimum to access an AIF, which can become out of reach for many investors. So really the question is, can't we find a middle ground somewhere? And that's where an SIF comes and sits. Now, it may not offer you the whole range of sophistication that an AIF can do. For example, leverage on the higher end may not be allowed in an SIF, but certainly because 25% shorts are allowed, it can blunt the downside, which is a great addition in one sense. And therefore, some of the strategies that became very popular in an AIF, which is the long short, the low net long short strategies, something like that can be done in an SIF as well. But because it is now available and accessible in a very well-regulated mutual fund platform for a lower investment size, it actually becomes, in a sense, the best of both worlds, that it's accessible because of the size and it's very well regulated in a mutual fund platform. So I think that's a great addition. It's not just about that strategy. There are other concentrated equity strategies, more unique debt strategies that will be available in the SIF. So I think it's a great addition. It's early days yet, so we'll have to see how it develops. Eventually, it's going to be more choice, but performance, which will drive behavior and attractiveness of the asset over a long period of time.
So Vishal, we have come to the end of the part 1 of our conversation. To end, I wanted to ask one key question. What are the key risks you see for the mutual fund industry over the next 5 to 10 years?
So risks to the mutual fund industry over the next 5 to 10 years. That will need a bit of decoding to get right.
So I'll ask 4 questions, just one word, no overthinking. Wealth is, risk means, money without purpose. If you had to give one advice to your 25-year-old self.